Welcome to another exciting episode of The Trading Bell. This week on the program, we'll be speaking to the Chief Executive Officer of the Nairobi Securities Exchange, Mr. Geoffrey Odundo. The year has just begun. What is in store for investors at the stock markets? We'll be getting a deep dive from him. And with an incoming election, what does it stand for the economy? He'll be unpacking all this for us. But first, let's take a look at his profile.
Geoffrey Odundo is the Chief Executive of the Nairobi Securities Exchange PLC. Mr. Odundo, an accomplished investment banker, has been in the financial services sector for the last 26 years, 20 of which have been in the capital markets in various senior roles in asset management, corporate finance and securities trading. He is currently a director of the Central Depository and Settlement Corporation Limited, director of the NSE Clear Limited, and a trustee of the NSE Fidelity Funds. He is a member of the Central Bank and Consolidative Forum for Domestic Debt Market and a council member of the Institute of Certified Investment Financial Analysts. Mr. Odundo is also a director of the Association of the Stock Exchanges of Africa and is a member of the Thomson Reuters Africa Customer Advisory Network. He holds a master's degree in strategic management and an undergraduate degree in mathematics and economics. He is also an advanced management program graduate from Strathmore Business School.
Great to see you. Happy New Year and looking sharp as always, sir.
Thank you, Abby. Yeah, we're happy to have crossed to 2022. Very exciting year. A lot of things happening.
Okay.
Yes.
Last I saw you, you were down in South Africa with the president on the business delegation. But we'll be talking more about that later on.
Okay.
The year is just fresh. A lot of expectations from investors, a lot of uncertainties as well. We now have a new variant, the Omicron Delta variant, having a big impact across many other capitals across the world. But to dispel any fears, to assure investors and also tell us the honest truth of what's happening in the markets, what's your overall assessment? How have we started off the year?
Okay. Thank you, Abby. It's always good to be on this set with you. I think we've done a phenomenal amount of work together, and I think we'll continue doing this. So if you look at let me just put a bit of perspective on what happened in 2020 and 2021, which was a very critical year for us, just coming on the back of 2020 and the knock-on effects of COVID. So 2020 was a year we had a lot of expectations in terms of the promise. However, given that there was an upsurge of the COVID cases again, the market sort of slowed down in the middle of the year, and that sort of impacted on our overall target numbers. So we closed the year with a total turnover on the equity markets of 137 billion, which was slightly behind what we did in 2020, which was about 154 billion. But on the bond side, we closed with a figure of about 936 billion, again, way ahead of what we did in the previous year of just about 600 billion. So we had a very good performance on the bond side, very, very phenomenal growth in that, and that basically informs how investors sort of reallocated their funds. They reallocated their investments from the equity markets into the bond markets because of what was going on and very good valuations happening there. So we closed the year well. We're still working on the end of year numbers to know how the company performed. But generally, I think the index also went up and all the parameters went up. So a good indicator of what things to happen. Now in 2021, again, we had interesting achievements. We were able to launch a platform we call the Unquoted Securities Platform that now gives issuers an opportunity to put your company in a private market and have it trade in the private market in preparation to come to the listed market. So that was a very key milestone for us. We were able to introduce a partnership product with Safaricom called the Bonga Points for Shares, which again is now going to be picking up, and you can use your Bonga Points to acquire shares. And we were able to launch our day trading platform. So today you can actually buy and sell a share during the same day. You don't have to wait for the 3-day settlement cycle. So I think those were key achievements that have now put us in a perspective to allow us to now move this year forward into a more and more exciting exciting market. So I must say 2021 was a very interesting year for us, a mixed bag of things, and we're very happy with what happened. Looking into 2022, very interesting year. We have a lot of things happening. Again, we've seen the recurrence of the COVID cases through this Omicron variant that's come through. But I'm happy to see the vaccinations have increased. I mean, we have hit our 10 million vaccination target, and that has actually reduced the level of severity and hospitalizations, which is something that we have to be very watchful about. That notwithstanding, of course, it's a key concern because we're seeing globally there's already certain possibilities of restrictions coming into certain jurisdictions that are active in this country. So we have to keep our eye open and just see that how we're going to be able to navigate that. We have good expectations for this year. We're budgeting very optimistically that it's going to be a good year, notwithstanding that we have a general election. Our view about general election is that it's already priced in by investors. They price this thing 1 year in advance. So the shares that are trading today have taken the political risk into consideration, and you won't see so much volatility happening. Otherwise, we're talking about that's almost 7 months to elections. I don't think we'll see a huge amount of volatility coming through. So, so our expectation is that you're going to see a fairly good year. I'm happy that these elections are in the middle of the year, so that we can hopefully get out of it and close the year stronger.
All right. Of course, you did mention that we have the elections coming up, and impressive performance, I must say, on the last year. Looking at some of the milestones that you did mention, I'll be drilling deeper into this. But just to pick your perspective on, as we anticipate the elections, we also have the budget coming up for this financial year. Some have quoted it as the legacy budget, as the incumbent is exiting, and it will be more a question about the legacy and implementation of pending projects. But what kind of outlook do you have, especially looking into an area of interest when elections come and also the budget coming up? There's a big push towards clearing pending projects. What does this portend for the economy and also for the bond market?
Good. So last year, the government raised about 636 billion from the debt market. Of course, all these were listed securities on the capital markets, and they were able to do this with a lot of ease. Just speaks to the interest in the debt market, even from retail, and that's a very good assurance. So the depth in Kenya is good. We've got a good, deep, liquid market that the government feels very confident to raise more and more money. I think owing to the amount of money available, I think the government or the central bank has been front-loading their debt requirements. I mean, they've been taking more in terms of just ensuring there's more. They're able to take more and more capital way in advance of the expiry of the financial year.
Sure.
And I feel that they will be able to. Domestic debt markets will continue. They will be able to raise whatever they're looking for because the markets are still very liquid, and hence they won't have a challenge raising that. That notwithstanding, I think there's also critically they must look at the rates at which they borrow because that can have a knock-on effect on the overall market rates. Because if there's too much aggressiveness, then we stand the risk of inflation creeping in and again causing certain other stresses to other segments. So they've also got to be very careful that they don't get too aggressive in terms of pricing. I think that's something that they're watching and ensuring that. So I think that in terms of meeting the domestic component of the budget, I think that will be done very successfully. I think the other thing that we're also trying to encourage is private organizations to raise money through the capital markets to also just reduce the crowding effect in the banking sector. I'm happy to say last year we were able to help 3 institutions raise money. We had Centum, who did a 3 billion bond. We had Family Bank, which did a 4 billion bond, and we had EABL, which did an 11 million bond. And that just says that the debt market, corporate debt market, is actually fully recovered now. And hence, you don't have to go to the banking sector to raise medium to long-term capital. You can come here and do a bond, and that should reduce the crowding effect in the bank and allow banks then to lend to the SMEs and retail segments of the market. So I think as a government, as this budget comes to the market and the budget is read, I believe that a lot of these considerations will be taken into account, especially how then are they able to ensure that all the legacy projects are completed well and on time, clear all the spending bills. We have put a case that the government can actually be able to raise money from the capital markets, even through other avenues, like listings or offering sell downs of existing companies. And we think they need to take that into consideration because they need to have an appropriate funding mix, all right? Not skewed to one funding source of debt. They need to raise money through selling down some non-strategic entities into the market and raise that money to help balance the budget. And that's a case we've put forward, and we hope that that will be taken into consideration. I was happy to see that the privatization commissioners are now progressing, and hopefully once they are put in place, we'll then be able to have those conversations towards really looking for other alternative source of funding.
Interesting. And of course, Mr. Odundo, what you brought up leads me to my next question, which touches on the global dynamics. What do you see in the horizon, especially at a time and space, as you did mention that there's a lot of developments on the international stage, looking at interest rates in the United States and what this portends for African investors. At the same time, the whole conversation around the free continental trade area has sparked a very interesting tangent, especially when it comes to deepening financial markets within Africa. I don't know, what stands out for you this year that you feel is going to take center stage? Okay.
So at a global scale, the biggest challenge facing financial markets out there is really the returns, the yields on investments. If you look at the bond yields, especially the long-term bond yields in Europe and in the US, in some jurisdictions, the yields are negative because there's so much capital available that the government doesn't even need it. So they're offering negative yields on some of the long-term bonds.
Yeah.
So what are those investors going to be looking for? They're going to be looking for other opportunities in other jurisdictions, especially the emerging and frontier markets. And that's where we think the opportunity for Africa lies, because we are able to give double-digit returns on government securities here. And if you look at the valuations of our equity markets, again, the returns are also equally competitive. So there'll be, I think there's going to be a high allocation of global funds coming to invest in emerging and frontier markets. And that's where we think we can primarily sit.
Allow me to take you back. You did mention, of course, matters to do with how we can deepen trade and, of course, touching on the stock markets. I do have knowledge that you did take part in the delegation that was in South Africa.
Yeah.
And Kenya as a country and also as an economy, we've been positioning ourselves as a financial district in terms of being a financial hub for the region. And there's been a lot of talk that the NSC is looking to tap into linkages across the borders. Perhaps bring us up to speed. What should we expect between NSC and the JSC? And of course, I know there's already a lot of collaboration with the Rwanda Stock Exchange as well as Uganda. And what's the latest on this?
So the state visit by the president, of course, was highly to strengthen the trade partnerships between Kenya and South Africa. And in the process, a number of bilaterals were signed. I think significantly what you saw was the signing of the Kenya Airways,
aviation.
South African Airways partnership, which I think is a very, very good thing. And I say this because Kenya Airways is one of our listed companies, and we are happy to see any progress towards helping Kenya Airways turn around. And I think that was a great milestone. And hopefully we're going to see some some great working partnership there. On the sidelines of that, of course, we were able to attend forums and really put a case for Kenya, especially with regard to investment opportunities and getting South African companies to think of listing into Kenya because of it gives them an opportunity to really put their brand into the Kenyan market. And secondly, when listed here, then you have investors who have owned your shares and hence become your customers. And that sort of relationships are very important. But with the JSE, who is our anchor partner in Africa, we were able to have conversations around how can we encourage cross-listings. Now, one of the things that cross-listings do, it provides opportunities for investors to arbitrage. So if you're able to list your shares in two markets, you're able to have opportunities to trade in markets depending on which is offering a better return at a particular time, because factors will be different.
Yeah.
There could be currency advantages, there could be maybe an economic advantage in Kenya, hence the share price here is higher than it's in South Africa. So you want to take advantage of that, and that's what cross-listings do. And so we had conversations on how we can get cross-listings from JSE into Kenya and possibly backwards, but we think there's a lot we can do there. There are a number of things that the JSE is doing, especially to build their turnovers to new products around derivatives. It's the largest derivatives market in Kenya. We've just had ours, which is about 3 years old, and we think there's a lot of things we can borrow from there. And so we were just strengthening that partnership with the JSE to see how we can then have a strong capital markets between the two markets and really connect better with each other, just to encourage investors to enjoy the benefits of both sides. I think one of the things that comes up clearly is that they appreciate Kenya is a very strong economy with great opportunity and very good capacity, and so it was an exciting journey we had there.
Amazing. And this takes me next, of course, Jeff, from the vantage point you sit in. You've been termed and dubbed as one of the most innovative CEOs in the country and also across the stock market arena. The biggest conversation right now is NSE has been very innovative, but there is still the low uptake. Does this speak anything around the business sentiment in the country? For instance, talk to us about day trading. How is the uptake so far? You've seen, you've done the derivatives, you've done quite a host of great products, and what's the missing link? Why isn't the market responsive to the degree that is aspired to versus the forecasted one?
Yeah, thank you. That's a very good question, and it speaks to our current strategy, NSE 2020-2024 strategy, which is focusing on sustaining the growth of our products. One thing that I want us to really lay down well is that all products have a gestation period. I mean, we cannot launch a product and expect it to hit the roof on day one. It takes a lot of learning and a lot of understanding on how these products work. I can tell you we had 2 visits here last year around December from Uganda, and we were explaining to them about how derivatives markets work. We saw eyeballs, we saw excitement in them because they were saying, oh, you mean I can protect my portfolio using a derivatives contract? Now, they did not even know that. So financial knowledge of what these products are and the benefits they can provide is relevant. Look at the real estate investment trust that we did. We have a company called Econ that has raised money and are doing student hostels.
Sure.
That real estate investment trust is trading actively on our alternative market, and people are understanding it. So there's going to be a bit of a lead time for people to pick up and understand products and see the advantages, and that's why we are really out there to focus on educating to enable these products take off. If you look at day trading, the data that's coming out now is that it's actually gaining traction. We just launched it in end of November, and I think we're seeing turnovers of almost, I would say 2 to 3% uptick increase being in the market coming through day trading. And we think that as the markets get exciting, as they get more relevant, as we see as opportunities and understanding of what day trading does, I think we'll see more and more uptake. So it's going to be important for us to continue to educate people on these products. I think that's going to be very relevant. The second thing is to really engage with owners of capital, especially pension funds, to really take advantage of what some of these contracts can do. Really activate our retail. We want to focus on retail. Retail for us is very, very critical in this coming period, and that's why we have introduced apps. We have introduced things like Bonga Points and all these things to make it easier for Kenyans to buy and sell. And then we're really working on getting a big IPO to trigger the market, because retail investors come during IPOs in a big way. So we call it a market stimulating listing. And that's why our engagement with government and other big players to get a market stimulating listing will wake the market up. And that's the kind of things we want to focus on. So our strategy is clear. We want to get this market up. This is going to be a phenomenal year for us, 2022. We're going to be measuring all these metrics to see how we are doing. And you're going to see a lot of visibility, especially around all these new products.
Quite some interesting sentiments there, Jeff. And as we close, of course, being at the helm of the NSC, I just want to get your parting shot. We've also seen a couple of counters that have been literally idle. You've partially responded to this issue, saying you need a big IPO that can stimulate the market. But what's the game plan for such listed counters? Because at the end of the day, you want a very robust and dynamic market that can really not only increase investor participation, but can also boost financial sector deepening.
Yes. Abi, I think that's a very relevant question. One of the challenges we're grappling with right now is what you call the concentration risk, where about 10 companies control the volume of trades happening. They control also the volume of the market cap. So you find 80% of the market cap is basically controlled by 10 companies, yet we have 60 companies. So we're trying to see what are the challenges facing these other 50? Are there liquidity? If it's liquidity, can we encourage them to do additional offers so that they increase the quantum of shares? Secondly, can we engage with the issuers to see how they can promote their products? We're encouraging things around investor relations. We're encouraging companies to bring on board investor relation services. And we have independent firms that do this for you. What that does is that it opens up or demystifies your business, and so investors start getting interested and saying, this is what this company does. So they've got this experience to know what investors look for in a company, and they'll be able to help you. Things around having regular investor briefings, for instance. Some of these companies, management needs to be exposed to the investors so that people understand who is running, what are the visions. I'm happy a show like Trading Bell has spoken to all these companies, but they need to go a step further by having regular briefings, improving their websites to provide relevant information. Just to those little improvements, I think will increase the level of liquidity. We believe day trading will be a good trigger. Because some of the shares are not very active because they don't trade actively. But you see, when you have a day trading component, I can buy this, even if it moves by a shilling, I'll sell again, and you'll see more and more liquidity of that share coming through. So we're very keen on that. We're actually asking ourselves that question: what is not making these companies move up the ranking? And that's something we're focusing on.
All right. Your parting shot, Jeff, for investors, perhaps which stocks should we watch out for in 2022 and which ones should we not touch?
I have no biases. I would not want to offer a recommendation. I think our stockbrokers do a very good job at that.
Sure.
But I would just say that the market is very, very strong and resilient. We've proven this in 2020 and 2021, that we can be able to operate despite the challenges we faced around COVID, and just prove a point that our business continuity plan is in place and achieves that. So I would say that the market is attractive. We are attracting listings even from the region. I think we want to just tell issuers, for instance, to take advantage of the market, take advantage of this post-COVID period, to relook at your balance sheet, just reorganize your funding mix, and take advantage of the depth of this market. And ability to raise this money. Last year alone, one of our issuers raised about 33 billion and they're looking for 11 billion. Just tells you the amount of money left on the table, which I think is available issuers. And for investors, especially the youth, I think I want to encourage them to come to the market. This is the way to start growing wealth. It's more efficient than putting your money in brick and mortar and property. You can still buy property in the exchange through a real estate investment trust, and it's more liquid. But the returns are here. I think we need to take advantage of this market, and really the future looks bright, and I really hope to see more and more activity this year.
All right. Thank you so much, Mr. Geoffrey Odundo.
Right.
Well, that is the CEO of the Nairobi Securities Exchange. Geoffrey Odundo, quite optimistic about this year despite the several aspects that have characterized 2022, from the new variants and of course the upcoming elections. He says all this has already been priced in when it comes to stability of the economy, and speaking from the heart, is looking forward to a great 2022 for investors, and of course you, the young people out there, take advantage of what's happening at the stock markets. Well, that brings us to a close on this week's edition of the Trading Bell. Until next time, take care, keep safe.